Hey everybody, my name is Brandon from the StockSims.com, and today I want to talk about Bitcoin. What I want to do first is I want to try and explain my point of view on why I think Bitcoin has been falling the past few days, and then I want to talk about why I think Bitcoin could rise in the next few years, and then I want to hop into the trading charts to try and find a place or two to buy Bitcoin if I want to buy Bitcoin. So now let's get started. So quickly before we get started, if you want 4 free stocks from Webull, there's a link down below in the description. All the affiliate revenue I will gain will be reinvested directly into this channel and the website, and the first thing I will get is a microphone to get my audio quality out of the dumpster. So now let's get started. So with that out of the way, let's talk about speculation and supply and demand, which are my 2 reasons of why I think Bitcoin has been falling the past couple of days. So speculation is at the very heart of Bitcoin and is what gives Bitcoin its value. As I've said in the previous article, Bitcoin has value because we give it value. This is similar to the way that we give stocks value. Stocks have value because we give it value, but it is a little different because stocks are directly tied with a company that makes money. Bitcoin is not directly tied to a company that makes money. So, what are you really buying when you're buying Bitcoin? You're buying a bunch of numbers and letters made from a computer, and we're saying it's worth $34,000. However, if people start saying that it's worth $0 and enough people think that, then it's going to be worth $0. The point that I'm trying to make here is that Bitcoin has value because we give it value. So I'm going to use my speculation point to try and tie into my supply and demand point, which I think is a less hand-wavy explanation of Bitcoin's volatility and why it has fallen the past couple of days. So what I think is behind Bitcoin's volatility and price drop the past couple of days is the limited pool of supply and demand, or buyers and sellers. If enough people are thinking that Bitcoin is overpriced, then the buyers will come back, and Economics 101 will say that sellers have to drop their price in order to entice buyers again. However, what makes Bitcoin's case interesting is that the supply and demand pool is limited. Basically, I'm saying that there's fewer people who trade Bitcoin than who trade on the stock market. Because there's fewer people in that cryptocurrency pool, each individual person has a relatively larger impact on the price. So if there's a Bitcoin crash, then the buyers will step out of the way, will wait to see how far the Bitcoin price will drop, and then because of that, because there's a limited pool of buyers, the sellers have to drop their price dramatically in order to entice more buyers. This is fundamentally different than the stock market. The reason for this is because there's much more buyers and sellers in the stock market. So the probability that you will be able to find a buyer to match a seller in the stock market, which has a larger pool, is greater than that of the cryptocurrency market or Bitcoin's market because the pool is smaller. So I just listened back to that part of the video and that sounded confusing to me, so it's probably confusing to you. So what I'm going to do is I'm going to try and explain this visually as well to try and make my point clearer. So here we are in the stock market example when I said that we have a much bigger pool of buyers and sellers. So here we see a large pool of buyers and a large pool of sellers-ish, not to scale of course. What I'm trying to say here is that these sellers have a lot of opportunities to find buyers to match their sale price. This is different than the cryptocurrency example, where as we can see here, we have less buyers and less sellers. Now, these sellers don't have as many potential buyers to buy the cryptocurrency that these sellers are selling at. So because of that, these sellers have to dramatically lower their price in order to entice the smaller pool of buyers. So hopefully that makes it more clear. So now that I've given you my main reason, my supply and demand reason for why I think Bitcoin is inherently volatile and susceptible to large drawdowns like the ones that we've seen in the past couple of days, now I want to talk about a couple reasons why I think Bitcoin could go higher in the next few years. The first one is inflation. So the central banks of many countries, including the United States, has been pumping out money like crazy because they want to pump out stimulus checks and other stimulus programs. What that means is that there is much more money in circulation right now, so inflation is going through the roof. What that means for you is that the dollar that you have in your bank account will be worth less in 2 years' time. People are buying Bitcoin because people think that Bitcoin will rise in value faster than the money in your bank account will lose value. The second reason why I think Bitcoin could gain value in the next couple of years is the introduction of institutional investors. So I've mentioned institutional investors in my previous video on Bitcoin, but the main point I want to make here is that institutional investors are not day traders. These people are buy and hold investors, and these people stabilize the price of Bitcoin. So this is a paper by Wei Li here from the Hong Kong Polytechnic Institute. And this describes the point that I'm trying to make, that institutional investors decrease volatility. So this paper is focused on the Chinese markets, but the same concepts apply to Bitcoin here. The point I want to make is mostly summarized in this highlighted part here. So this is the point I want to make here, is that institutional investors during times of high volatility are not doing anything. Because they have so much money behind them, and because that money is sitting out of that volatility, what it does is that it's basically acting as a dampening effect to the volatility. This eventually calms the volatility down and stabilizes the asset. So here we are in Bitcoin's chart, and as you can see here, these past couple days we've been experiencing some massive volatility. And like I said, this is completely normal for a new and beginning currency, and it should be expected if you are investing in Bitcoin. So the first thing we always do is we look at levels here, and I see a nice support/resistance level here at the $23,000, $24,000, $25,000 level. I think this would be a good spot to step in if you want to step into Bitcoin. I think another good level to step in if you want is this $18,000 to $19,000 level here. I think that this was the most recent high that we made before we had a nice run up all the way to the 40,000s. So if it comes back down to here, I think that would be a good place that people are looking for to step in or to expand a position in Bitcoin. The next thing I want to talk about is this 50-day moving average here, which is this blue line. As you can see, it's been a nice place to pick up Bitcoin. We touched the 50-day moving average down here and ran up above it. We touched the 50-day moving average here. We ran up kind of sideways, but still above the 50-day moving average. Touched it one more time down here before climbing the mountain upwards. And as you can see, just today, we touched the 50-day moving average. So what does that mean? It could continue to run upwards like we saw in the past here, but I don't know if that's the case. We are seeing huge candles here, which means that there are huge volatility swings. And looking at the MACD here, which is a measure of momentum, our MACD is negative, which means that our blue line is underneath the orange line. So our short-term momentum is weaker than our long-term momentum. That is normally a bearish sign because that's saying that we are basically losing momentum. The other thing I want to point out here is the RSI. As you can see here, we were recently overbought when we were at the 40,000 level, and then we came back to earth just slightly, and now we're neither overbought or oversold. So what does this mean for Bitcoin in the future? Well, nobody knows, and your guess is as good as mine. But to me, I see two possibilities. One is that it bounces up from this 50-day moving average upwards and continues climbing. I don't really see that as the case. I see a little consolidation, maybe around this $23,000, $24,000 level or this $19,000 level. Even though we could see some consolidation around this big range here between like 19,000 and 30,000, I am long-term bullish on Bitcoin. I do think we could still see some new highs in 2021, but you also have to consider the downside risks before you invest in Bitcoin. Again, the question I want to ask is, what are you actually buying with Bitcoin? So that was my review on Bitcoin. Let me know what you thought about it by dropping me a comment down below. If you have any questions or caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.